All right, traders, within tonight's lesson, I'm going to be teaching you one of my favorite and most profitable trading strategies. I'm going to walk you through how I use this trading strategy to consistently profit within the stock market. This is a trading strategy that I've also taught to many people throughout many years, and it has helped create a couple multimillionaires. With that being said, I'm going to walk you through step by step how you can use this trading strategy to profit within the stock market. The trading strategy works both ways. You can go long and you can go short. You can buy calls, you can buy puts. It's a trend reversal trading strategy designed to get you in at the best entry with perfect timing so you can profit on those very lucrative further out of the money option contracts. With that being said, I'm going to walk you through this day trading strategy. Now keep in mind, this is just some of the basics, some tips, and some tricks. This is not the entire trading system. This is just going to help walk you through on how to trade using this pattern. Let's get into it. This is going to be the one simple gap trading strategy that can help change your trading career. Because that's all it takes, man. In terms of trading, if you have one simple strategy, one simple pattern, that is a great foundation along with the system, risk management, position sizing, etc. So let's go through some of the basics. So what you're currently looking at, this is a 30-minute chart on the SPY. This white line you're seeing right here represents the previous closing price. So what you're looking to do is, and this is what you need to understand, I mainly use this trading strategy on SPY. And we're looking for SPY in terms of puts and to go short for reversal. This is the short selling example. We are looking for a gap down. As you could see right here, the SPY ended up closing on this day. So this is a 30-minute candle. This is the last 30-minute candlestick that closed. You can also do this by simply, looking at the daily chart instead of looking at the last 30-minute candlestick that closed. But as you could see right here, if you look at the 30-minute chart, you can see this was the last candlestick that closed on the SPY. This bracket right here with the dots, that represents the next day. So the point is the SPY ended up opening up lower than it previously closed. This white line right here is where it previously closed. That represents the previous day's closing price at 476.68. The next day it opened up lower than it previously closed. That means the SPY gapped down. So what you do is you wait for it to go back up and close the gap. Now here's a tip I can give you with that being said. In terms of the tip, the bigger the gap down, the better. The quicker it recovers to fill the gap, the better. Now, if it drops for multiple days in a row and then quickly goes back up to fill the gap, that's another great, example as well. So you're looking for a very volatile move within one day where it just has a massive gap down, then it explodes back up to fill the gap the same day. Or it could be a multi-day situation where the SPY gaps down and then it keeps on going down or keeps on having multiple gaps downs, and then it quickly goes back up just as fast as it went down, right? So that's what you're looking for. You want a big move to the downside, and then you want it to quickly recover to fill the gap. Once the gap fills, you have to wait for a 30-minute trend reversal or 30-minute bearish confirmation. So if you don't know what a 30-minute trend reversal candlestick is, or if you don't know what a 30-minute bearish candlestick is, you can do your own research, on Google or reading books. You can do it that way. In terms of how I figured it out, I would just look to see when SPY had reversals at key resistance levels or when it filled the gap. I would just look at the 30-minute candlesticks that formed, because everything it is that I've learned throughout this market has been through my own unique experience of trading the chart. That's been the vast majority of it. So instead of me Googling what a 30-minute trend reversal candlestick is or what a gap is or anything like that, I would just visually look and say, oh, SPY ended up gapping down lower than it ended up gapping down. It opened up lower than it previously closed at the price. And then I would say, okay, well, when does the SPY typically have reversals on the 30-minute chart? What do the candlesticks look like? So what I'm telling you is it can be visual. You don't even have to know the names of these bearish candlesticks. There's names for them. There's names for these trend reversal candlesticks. You can just visually see by looking throughout the chart history on the SPY, and a good way to do this is to just keep on analyzing the 5-day 30-minute chart or the 10-day 30-minute chart and keep on looking for patterns that are repeating itself using the 30-minute chart. So look, man, here's the point. The point is, these are some trend reversal candlesticks that you can visually look for, and you can go back throughout the entire history of the SPY, and you could study every single time it closed a gap on the 30-minute chart, and you could take screenshots of what those candles look like when it successfully had a reversal. But this is the point. It filled the gap, and it basically failed to break out for 2 hours. So you could see right here, it almost filled the gap, and then you could see right here for 90 minutes straight. It was forming lower highs and it was topping at the gap. This previous closing price, this white line, that's what that indicator on the chart represents, right? So another thing you could look for is this. In my experience, the biggest drops have happened when the SPY is topping on the 30-minute chart, forming lower highs or retesting, just failing to break out for 90 minutes to 2 hours. So in this case scenario, you can basically say it was 2 hours. You can see right here, it almost filled the gap. So we're going to count that as 30 minutes. And then for 90 minutes straight, it just consistently failed to break above the gap. So what I'm telling you is, if it's just sitting at this gap and these 30-minute candlesticks are closing with these bearish wicks, or you see a red bearish candlestick on the closing, trend reversal wicks, and it's just topping for, 60 minutes, 90 minutes, 2 hours, if you're seeing that happen, that's when the best plays tend to occur. So what I can tell you in my experience is 60 minutes to 120 minutes, so 1 to 2 hours, ideally 90 minutes to 2 hours of just resistance, topping, forming lower highs, red bearish candlesticks. So this is something to look for, man. See how it's just consistently forming these wicks. It's forming the red bearish candlestick. And when it's topping at these wicks and you see this long wick right here, what's going to happen is it's going to try to retest the low of this wick, which is another way how you can get your price targets. If it's failing to break above the gap and it keeps closing bearish, it's going to try to go back to these wicks, and it's really going to start to happen within that 90-minute to 2 hour time frame where it's just failing to break out. So the longer you wait, the better. And the longer you wait, the more confirmed it is and the more decayed the contracts are. Meaning you can make much bigger returns. The contracts are going to be a lot cheaper. If you were to buy, puts right here at 476.20 in the beginning, they're going to be a lot more cheaper if you buy them right around here towards the same price because you waited. So like I said, if you wait like 60 minutes, 90 minutes, you could start to gradually go in and add every 20 minutes, every 30 minutes, right? And then in terms of your entries, this is what you want to do. You want to enter towards the gap once you get a trend reversal confirmation or a bearish confirmation. You want to wait in time brackets so that key time is like 90 minutes to 2 hours. That's when you really want to start scaling into these. And when you're seeing a bearish candlestick like this or a trend reversal candlestick like this, these are the entries to look for. Look for the closing price of this candle. So this is a red bearish candlestick. This is a great confirmation that's going to start to drop and go back to the wick. Where do you start to enter? You start to enter on the next opening of the 30-minute candlestick. So when this closes red and bearish and it's confirmed, or when you have a trend reversal candlestick that closes like this, you look to enter towards the closing price of that candle. So it closed at 475.88. That's where you can start to enter. The best entries are towards the highs of these 30-minute candles. Wherever the highs are of these 30-minute candles and wherever the closing price is, those tend to be great zones. But the best ones are towards the highs of the 30-minute candlesticks on the retest. So in terms of true bearish confirmations, this right here is kind of trend reversal, but remember, you're only an hour in. So ideally, you kind of want to wait like an hour and 30 minutes to 2 hours. Those are the best ones. But in terms of true bearish, this is extremely bearish. So basically, when you see it like this at the gap, you would buy puts on the opening of the next 30 minutes, and you would look to get in towards the closing price of this candle, but the best entry where you would look to get in is towards the high of this candle. Now, in terms of adding, well, if you have another bearish 30-minute candlestick that closes right here, you add at the opening of the next one towards the previous closing 30-minute, and then you look to scale in if it goes back towards the highs. And then it starts to drop, and then you start to scale out towards the bottom of these wicks would be the overall target. These particular moves can last for about an hour to 2 hours in my experience. So that's just some of the basics. I'm not going to be going into the full explanation of what contracts to buy. You can look to go potentially 1 point out of the money, you sell into the dips, you sell into the key levels where it's spiking. So right here, it had a nice spike at 474.61. So obviously you want to sell some right there. Right here, there's a lot of support at 473.50. There's a lot of bottom wicks here where it spiked. So obviously you want to scale out there. So you scale out into the dips, and you can even add back if it has a nice little spike when that's confirmed 30-minute on the bearish. You can even add some back on the spikes using the 1-minute chart. That's a whole nother system. Like I said, I'm not going to be breaking down the entire system step by step and everything that is that I'm doing. In terms of risk management, that's a whole nother system, but you want to put in your max risk per trade. So if these contracts go down to zero, that should be, in a sense, your max risk per trade. Whether you're risking all of the contract's worth or whether you're risking 50% of the contract, you put your max risk in the trade per the contracts. If you get stopped out, then you lose your max risk, 2% of your account, whatever you're risking, right? So just some tips and tricks that I'm sharing with you. Now, you could see right here, the same thing happened. So there was a gap to fill in the SPY at 475. So what did I tell you? An hour and 30 minutes to 2 hours, that tends to be that key time frame of where if it's just consistently failing to break above the gap and it's topping out forming these wicks, it tends to drop. So you can see right here, there was a gap to fill at a lower level. And once it formed that red bearish candlestick, right after it was just consistently, failing to break above the gap and just forming resistance, it started to go back down to fill the gap. G-Roar, the lead trader in Team Roar, he ended up hitting puts on this day. He absolutely crushed it. I hit puts with him on this day using the gap close reversal strategy. And then you look to sell those puts towards the bottom of these wicks and scale out towards there. In terms of today, the team absolutely crushed it. So in terms of this confirmation, it's puts. I ended up hitting calls. So again, you could just see it's the same pattern. It's the same thing I just said, except this time it's a gap close reversal to fill the gap below. So that's a whole nother strategy. This strategy right here, it fills the gap and it has a reversal and it starts to go back down towards the low of these 30-minute wicks towards the lows of days. This is an add-on. In this situation, the SPY ended up gapping up. You see how the SPY gapped up and it opened up higher than it previously closed? Well, once it went back to fill this gap that was waiting to fill above, you see how it gapped down right here and then it gapped up right here. So it's having those big moves we're talking about that we like to see. So it's gapping down and then it quickly spikes or it quickly gaps up to fill the gap. And then it's consistently failing to break above the gap. It forms the red 30-minute bearish confirmation. Boom, that's your confirmation to get in. You start hitting puts and then you start scaling out towards the lows right here. And then you could leave some runners and scale out at this gap. So it had another successful gap close reversal, except the difference was not only was it reversing at the gap, but it was going back down to fill this gap that was waiting to fill below. So this is the second part of the strategy. I personally used this trading strategy today to make multiple 100% profit returns by buying calls on the Trendwidth SPY to literally make over $6,500 on the day using these trading strategies both ways by getting calls and puts with this particular strategy. So that's what I ended up doing just today. Like I said, throughout the years, I made hundreds of thousands of dollars in profits using just this one trading strategy alone. And it has helped create a couple of multimillionaires. So it's a very powerful trading strategy. It is one of my favorites. It's very simple to teach throughout a video. And in terms of the call side, you can just see, man, this is what I told my team within Trader Society. Right here, I said, if you go to my alert section, you see right here, we absolutely crushed it today, man. These were all my alerts. Every single day this year has been a green day. Yesterday, I called out a play that went up over 500% that I literally hit 500%. I'm not just calling out 500% and 1,000% plays. I'm actually hitting them and buying and selling for that 500% to 1,000%. So with that being said, you could see right here in terms of the plays that I ended up making today, it was an amazing day, man. I ended up buying call options. Let me go to this right here. So I ended up buying 473 SPY calls at 57 cents. And then I ended up YOLOing calls that were a little bit further out of money. I think they were like $1 and like $30.40 out of the money at the time. 474 SPY calls at 21 cents. These calls right here went up over 1,000%. It's absolutely crazy, man. And I was scaling out, for 70% wins, 40% wins. And then I did the exact same thing again by following the trend using this trading strategy with the 30-minute chart. That's a whole nother strategy. And I kept on buying calls when it dipped back down and scaled down the rips. I bought these contracts at 2:47 p.m., 4775 SPX calls at 140. And then I ended up scaling out when it hit $5 a contract I was scaling out on those particular contracts, man. We absolutely crushed it within the chat, man. It went from $140 to $500. But yeah, man, absolutely crushed it on the day using this gap close reversal strategy and using the 30-minute trading strategy. So in terms of using it on the long side, it's very simple. You wait for it to gap up, and like I said, you want it to quickly go back down to fill that gap that's waiting to fill below, right? So you could see it opened up higher than it previously closed, and then it quickly went back down. And once you see that 30-minute confirmation, so this right here, this is a tip I'm going to give you in terms of patterns. So this right here, this is a kind of fairly bullish confirmation. You have a little 30-minute bottom wick right at the gap, and this previous resistance right here is likely going to react to support. The SPY had a big gap up and a big breakout. Once it closed this gap, bearish confirmation has reversal, so it quickly downtrended to go back to this previous resistance. Meaning the SPY, when it tests this previous resistance for the first time, since it had such a big move up, it's likely going to bounce first and react to support. And as you can see, that's what it was doing. The 30-minute candle closed with a bullish wick right here for a bounce. Now, this is another tip in terms of pattern recognition. And again, these pattern recognitions that I'm bringing up, you can study 30-minute patterns. This is a key tool to the trading strategies that I use, right? So the gap close reversal, that's one strategy. And then I showed you can stack it. So in that situation, this was a gap close reversal to then go back down to fill the gap below to have another reversal, to then stack with previous resistance right here, reacts to support, to then stack with 30-minute patterns. So this is a pattern that I've seen happen a lot with the SPY. When the SPY is downtrending sideways like this for just 2 hours straight, it tends to spike. That's what it tends to do. So when you see it downtrending sideways like this for 2 hours, once that fourth 30-minute candlestick closes, it tends to spike. So that's just a pattern that I've seen in my experience, and I basically combined that pattern with that theory. You can see right here, see, this is why I bought calls. I was so confident on calls because of, look at this pattern, look at this. SPY gaps down, it fills the gap, it goes bearish. When does it spike? After 4 red bearish candlesticks downtrending sideways, it spikes on the opening of the next 30-minute candlestick. It goes super bullish. So I'm seeing this and I'm saying the same exact pattern has happened. This is why I was so confident in my calls. And I literally said to my team that the target was going to be 474.50. You know, I did hold some runners for that target, but what I was doing, instead of holding my entire position, what you can do is you can hold like 20% of your runners for your big targets, and then you scale out on the rips, and then you add back at the previous resistance levels using the 1-minute chart at these key levels with the trend, and then you keep scaling back on the rips. That's a whole nother trading strategy. But I made it very clear to my team at 1:31 p.m. the target was 474.50, and the 30-minute is very bullish, and it should close bullish while I was holding in these calls. But anyways, just look at this pattern. SPY gaps down, right? And it fills the gap. SPY gaps up, and it fills the gap. So the point is, SPY is filling the gap. SPY is filling the gap. It's consistently failing to break out for 2 hours. It's consistently failing to break out for 2 hours. Once it starts to form those red bearish 30 minutes, once it starts to form that red bearish 30 minute after that like 2 hour mark to 1 hour 30 mark, it downtrends. It downtrends, right? So it's that gap close reversal strategy, right? But if you just look at the pattern, right here when it closed the gap, it downtrended for 2 hours straight. You see how it drops for 2 hours sideways, right? So if you just look at that, it drops 2 hours sideways. And then look, it did the same thing right here. It filled the gap. It dropped 2 hours sideways. So when I saw that short-term pattern occur on the SPY, what I did was I told myself history's going to repeat itself. When that fourth 30-minute bearish candlestick closes, it's going to go super bullish. See how it goes super bullish after that 30-minute candlestick? So what I did was I bought calls towards the opening of this candlestick. That's what I was doing. And right when this candlestick was about to close, with anticipation that history was going to repeat itself and it was going to have a super bullish 30-minute strong close, and also previous resistance right here was going to react to support, and also it was going to have a reversal at the gap. So do you see how I'm stacking multiple things within my favor? And do you see how everything it is that I'm talking about and everything that is that I'm stacking is not something that I've learned in a book? I've learned this stuff by just visually looking at the chart, by capturing patterns, by capturing trends within the chart. Some of the things that I talk about, there may be other people out there trading these trading strategies. But the point is, what I'm telling you is, I didn't learn that from other people. I learned this stuff through the chart of the SPY. Now, I've had people within my organization tell me like, hey, you should check out the 30-minute chart, and they try to show me some things, but I've learned it on my own. They just passed on the information to me, and then I have a very unique way of seeing things and reading the market and thinking about things, and then I just go from there. I do my own thing with it. But a lot of this is visual. So once you have it down, it's just developing a systematic trading strategy of scaling in, scaling out, leaving some to run, adding back. So like if I think it's going to go super bullish, I'll go further out of the money with some YOLOs, and I'll look to hold like 20% of my position. So if you're looking to hold for a big win, 20% is a good number to think about. Hold like 20% for the massive win. If the contracts go to zero, they go to zero. And in terms of, well, what do you do with the other 80% of the position? What you do with the other 80% of the position is you measure it by 30-minute candlesticks, by 30-minute trends, and you scale out into the rips. So you're gonna sell too soon, obviously, but you're scaling out at good levels where it could potentially pull back, and you're scaling out into rips, so you're not gonna get hurt on the options. Instead of scaling out in a pullback, what you're doing is you're scaling out into the rips, you're selling too soon, and then you add back on the dips. When it goes back to previous resistance levels on the 1-minute chart, you add back. And I kept on doing that, and I was banking, and I was buying different contracts with the trend, because sometimes it makes more sense to buy SPX contracts instead of SPY contracts with the particular trend. But to give you an example of what I was talking about, this is exactly what I'm talking about. If the trend is bullish and I have a big price target, you can simply just capitalize it by doing something like this. It breaks above the resistance, you sell into the rip, and then once it drops back down to that previous resistance level, so see how it has a big breakout above this move? Once it drops back down to the previous resistance, this is where I get in, and this is where I scale. And that's exactly what I was doing. I hit calls at the exact bottom of this because I know the levels where it's going to bounce. I know if the trend is bullish, or if I know I've confirmed a reversal, previous resistance is going to react as support. Look at the 1-minute candles, man. This is all previous resistance right at a gap. It's forming strong bullish wicks, consistently trying to break out, forming higher support. I was loading up on calls at the exact lows. I alerted these contracts, these 474 contracts at 21 cents at the exact lows. I was alerting these 473 calls at the exact lows, selling for massive wins, making over $6,500 in profits. And then I was consistently following the trend doing this with SPX. I bought these 4775 SPX doing this. Basically, I waited for it, like I showed you. I waited for it to go back down to the previous resistance, and then that's when I was get back in. And they went from 140 to 5 in a short period of time, and I scaled out. It was such an amazing trading day, capitalizing on these unique trend reversal gap trading strategies. So like I said, man, I'm self-taught, and I've learned all this throughout my experience of the market just by analyzing what it's doing. Okay, it's having a gap down. Okay, visual patterns. So I would really encourage you to start analyzing that 5-day and 10-day 30-minute chart pattern and using it to your advantage when those 30-minute candlesticks close. Combine all the patterns with the gap trading strategies. So that's just some of the basics. The information I've provided within this video is worth an absolute fortune. With that being said, we will continue to crush it. I encourage you to go out and experiment with this information that I provided to you through my own unique experience and continue to use it to become better. For those of you within Trader Society, for those of you within Team Roar, I also encourage you to use it. Use this to your advantage to profit within the chat. And also, when you see us call out our real-time trades, you're going to see. So in terms of this gap close reversal strategy, you'll see it typically happen twice a week on average. So you'll see it happen around 100 times a year. In my experience, it likes to happen twice a week. Another tip I can give you is look for patterns to repeat itself. If you're seeing, okay, SPY filled the gap, it's having that reversal, it happened. If SPY gaps down again within that week or within the next 2 weeks, that short-term trend will likely repeat itself, meaning when it goes back up to fill that next gap, if you're seeing that same bearish kind of pattern that's similar, then you capitalize on it. So just pay attention to short-term patterns that are repeating itself within this 30-minute candlestick. Like I said, this information that I've provided to you is worth an absolute fortune. So with that being said, if you would like to check out our community, you can take a look at Team Roar. This is one of the trading communities that I'm in, and I would really encourage you to check out this community. It's the first link down below within the description. So in terms of what you're getting access to, you are getting access to GRoar. You are getting access to GRoar. He's the lead trader of Team Roar, and he alerts all of his trades within real time. So if you want to check it out, it's the first link down below in the description. You will see his entire track record is in this program. He has a 95% win rate. He has the most unique trading system I've seen where he alerts his trades, and he's hitting 95% of the time trading options. And he's buying far out of the money option contracts, and he's selling in the money for massive percent wins, 100% gainers, 200% gainers, sometimes 500% gainers plus. So he's the best trader I've ever worked with, and he's got his own unique trading community program. And you also get access to the Team Roar chat. There's great information within the chat. There's great people within the chat. It's a very exciting place to be, and it's an amazing trading community. And I would really encourage you to take it out, man. A lot of people are taking this extremely seriously because the program is extremely successful. We have people every single day within this program posting gains daily. Every single day, man. I see it. 30% gain, 17% gain. How much is that worth to you? So what a lot of people do is they do this. They compound their account for the week and then they cash out on Friday. That's what a lot of people do. So like if you have $10,000 trading options like this with this unique trading strategy, you can make 10, 20, 30, 40, 50% on your account every single day. And then at the end of the week, they cash out and they tend to reset with their initial balance, or maybe they'll compound it a little bit and not reset at their initial balance. That's what a lot of the traders do. And we see the same people every single day posting the profits, getting results. It works, man. I'm seeing it happen. I'm seeing GRoar consistently post within the chat that he's making 30 to 50% a day on his trading account. And it is possible when you know how to manage your risk with far out of the money option contracts that you're selling deep in the money. So it's a very unique trading program. We've never seen anything like this, and it's very exciting. So I would really encourage you to get involved if you do want to learn how to trade zero-date options and you want to train with the best I've ever worked with. He helps and mentors within the chat, and people are getting results. We have many members who are consistently making $500 to $1,000 every single day. The program right now is only $150 a month. So it's $7.50 a month to get access to the community of traders within Team Roar, to get access to the lead trader and mentor within Team Roar, GRoar, right? So if you want to learn this, it's the first link in the description. And I would really encourage you to try it out because I'm telling you, it's a life-changing program and it has helped me out tremendously by learning and working with GRoar. So I would really encourage you to check it out. Trader Society is also going to be reopening up soon. That's another program. But I would encourage you to try this one out, man, because I'm telling you, this is the best. He's the best trader I've ever worked with, and this is basically the best trading community that I've ever seen. So yeah, man, Trader Society and Team Roar. If you want to join Team Roar, it's the first link down below in the description. You can trade with us tomorrow, and Trader Society will be reopening up soon. So with that being said, we will continue to crush it, man. It's absolutely crazy. I'm actually working on this new system where in terms of trading, like I'm pushing myself to the limits. I'm trading more in the morning session now. I'm trading the middle day session now, and I'm trading during power hour. And I'm looking at it where I'm planning trades the night before. I'm looking at stocks now. I'm looking at top 10 holdings. I'm looking at multiple stocks. I got news scanners that I'm keeping a close eye on. And I'm basically trying to push myself to hit the best trades, to hit the best plays possible. And I'm sizing in small. And I'm making a lot of trades on the day now. Some of the trades that I'm making, for example, if I think SPY is going to have a big move to the upside, I'll go with some far out of the money contracts in size small and I'll hold them. And then I'll go with maybe another strike, or maybe I'll go with the same contracts, and I'll scale out too soon. And then when I scale out too soon, I capitalize on the trend by selling into the rips on those calls. And then when it drops back down to the previous resistance, I add back or I pick up another contract, making multiple trades out of a single trend instead of just holding my entire position of one contract. So basically, like, I'm designing multiple trading systems. I'm working on a system where if I think the SPY is going to have a strong bullish day from the open or a strong bearish day from the open, I'll go super far out, literally at the beginning of the market, once I see my confirmation that that's going to happen with this daily chart pattern history, and then I'll just hold it into the close. And I could put a couple $100 in. If it hits, it could turn into a couple $1,000s. If it doesn't hit, then I lose basically everything within the contract, my max risk. And then from there, I have these other trading strategies. I might do a quick scalp. I might see a quick scalp, or I might see a trend on SPY. I capitalize on the trend by going out with a far out of money option contract, and then by looking to sell it in the money. As I'm holding that contract, I have other contracts, or maybe I have the same contract, and I'm scaling out into the rips. And I'm leaving at least 20% to hold on the riskier ones. And then I have other contracts that are safe, scaling out into the rips. And then when it dips back down to the previous resistance level, I'm buying and I'm adding on the dip. And sometimes when it drops back down to that previous resistance level for the bottom of the dip to buy, I'll pick up SPX contracts because that's what makes sense to do at the time. Those are going to go up more than SPY in that specific situation. And I'm using the 30-minute patterns. And now that I'm really focused on not just SPY, but also stocks, I'm making plays on stocks using 30-minute patterns. I see it happen all the time where a stock will have a delayed reaction. So SPY or a stock that follows it will have the move first, and then shortly after that, that stock will have the move. So you can capture both of the moves. So I'm doing a lot, and I'm basically very excited to try this new trading system that I've created because basically it's designed to make more trades than I normally do and to size in smaller than I normally do, but to use up the vast majority of my cash account. So every single day, it's like I'm managing the money, and the trades are designed to go up big. A lot of the trades that I'm making are designed to go up 100% plus, 200% plus, sometimes 500% plus, sometimes 1,000% plus. Each trade that I make is its own unique play, its own unique strategy. Maybe sometimes I might just try a quick scalp for 30% because that's the play. But a lot of the plays that I'm seeing, some of them could be 100%. Some of them could be a quick 200%. Some of them could be you just hold throughout the entire day 1,000%. So in those, you could size in extremely small. You just hold it. If it doesn't work out, it doesn't work out. If it works out, like $100 can turn into $1,000. And all of this adds up like crazy. So basically what I'm doing is I have this schedule now where every single night I scan for stocks and I prepare myself for the overall direction on a couple stocks for the next day. And then I enter those trades the next day. And then, as the market moves, as news comes out, as things pop up as stocks pop up on scanners, I'll find new plays during the day. And then I also look for delayed reaction plays on SPY. And then I also make multiple trades on SPY and SPX every single day. So this can add up to basically like a Christmas on crack type of portfolio with 0-day options, where you're playing for percentages. It's all about the percentages. So I'm looking at this in a situation now where I can literally just trade all fucking day, man, with this schedule that I'm working on. It's absolutely crazy, man. I'm addicted to it because I'm saying instead of sizing in big on 2 or 3 trades a day to make some good returns, I can make a lot of trades on the day, but the trades I'm looking to make, they're not these like bullshit 10%, 20% scalps. I might do a little scalp here and there for 30% or maybe on SPX quick 50%. I might do some, nothing wrong with that, but I'm aiming for massive winners out of the money to sell in the money, and I'm capitalizing on trends. If I think a trend is super bullish, I'll buy a far out of money option contract and I'll just hold it. And then I'll buy the same contracts or other contracts. I'll scale out into the rips, add back on the dips, and then, vice versa, I do the opposite for the puts, right? So I'm capitalizing, I'm making multiple trades by scaling out into rips when calls, and then adding back at the previous resistance, and then I'm creating new trades by, instead of just adding back at the previous resistance to my current holdings, I might pick up a new strike on SPX because that's the play, because SPX has this middle strike that SPY doesn't, and that might be the play to make a bigger gain is to go with SPX. So what I'm saying is I have this all fucking cracked out. It's perfect. And this is something I'm going to be laser focused on. So now I'm looking for hot stock plays, trending stock plays every single day at massive, major key levels. And I'm combining that. So I have that routine set up every single night. And then I have a morning routine that I'm setting up where new stocks that pop up on the scanner, I set that up. And then I have SPY and SPX all day. I have delayed reactions of stocks that follow SPY. And then we have breaking news. If breaking news comes out on a stock, I might want to trade it. And I'm using all these unique trading strategies and all these unique patterns that I've created every single day. It's like the account is going to compound like absolute crazy. And I'm not putting in a lot of money into each trade, but it all adds up because I'm making a lot of trades. And it's also about finding a balance of which trade does it make more sense to put more money in. which one has the highest risk to reward ratio, which one has the biggest upside potential. So these are just all things to think about. It can get very fucking complex, but the point in what I'm trying to make is I'm actually looking to trade more, not less, but I'm looking for the highest quality potential trades possible. That's where I want my hard-earned dollars to be in. Now, if I see a quick scalp that maybe I think it's going to go up 30, 50% quickly, I might take a trade there, but I'm looking to put my size in capitalizing off of these trends. And like I said, I'm capitalizing off of a trend of just buying far out of the money, selling into the money, holding for a long period of time. And then I also have contracts or the same contracts where I'm scaling out into the rips, selling too soon. And then I'm adding back or buying new contracts at that previous level where it's likely going to reverse to continue to go for the trend, which you can do by previous resistance reacts to support, and then vice versa for the puts, right? So I kind of went over the long side. So that's just some things that I'm working on, and I'm very excited to do this. And I've never seen anything like this that's been done, is to do that. So my schedule with trading is going to be absolutely insane, man. I really do love and enjoy that power hour session, but I see the potential of just capitalizing off of the entire session by using percentages, playing the percent game, analyzing and scanning for stocks every day and figuring out which ones are at the major levels where the major moves are going to happen for massive gains where it's not just SPY. And then also following stocks that following SPY for delayed reactions. With a delayed reaction, not only can you potentially see the future of the next play, but if you already know where it's going to happen before the delayed reaction, you can make 2 plays out of 1. It's fucking beautiful, man. So that's something that I'm working on, and I'm very excited to use that trading strategy. Actually, that's what I did all day. Today, I basically traded all day. I only had 1 loss, and I had several massive wins, and it worked fucking phenomenal. All of these gains kept adding up like crazy. I had contracts that I said I was just going to hold, very small size. They went up 300%. And then as I was holding those contracts, I was picking up SPX contracts when it would go back down to the key level where I was expecting it to reverse because previous resistance reacts to support with the bullish trend. And I was also just, taking advantage of other trading opportunities and other trading setups. So what I'm telling you is I'm bringing stock trading setups back. And my schedule is going to be that nightly schedule, that morning schedule, and then the entire day, if news comes up or if something pops up on the scanner, that's a whole nother play. And then just analyzing and trading SPY and SPX all day, and then the delayed reactions on the stocks. And this is all going to be done with options. So, I mean, in terms of the trades, man, this can add up to several trades a day if you were to count the ones that I scale out of and then add back in. This can add up to several trades a day, man. This can add up to like 20 trades a day. We'll have to see. I haven't got a number yet on how many trades I'm going to be making. But if you count the scaling in, scaling out, and then picking up new strikes as well, it adds up to a lot if you're counting that as the trades. So I'm very excited to do this because I'm entering trades that have huge profit potential, massive percentage winning potential, and I'm actually holding for their winning percent potential, right? And if I have bigger size, obviously I'm not going to hold the whole thing, but I'll look to scale out on the rips, and then I'll look to add back, on the dips and pick up new strikes to capitalize off the trend. But I'll leave a certain amount of size to just literally hold. If it goes to zero, it goes to zero. If it goes up 500%, 1,000%, then I cash out. Play for it depends what the play is. But what I'm saying is it's extremely exciting to have multiple stock setups now every single day and to just make multiple trades every single day and just understand what the play is. It's just you have to adapt to that. You have to adapt and switch like a light to that trading strategy of that play. Okay, what's the play here? Is the play here to do a quick scalp on SPX with the trend where I get out very, very quickly within 5 minutes and make 50%? Or is the play where I hold for 30 minutes because it's going to have a strong bullish 30-minute candle on SPY, so I got to hold this for 30 minutes? Or is the play where it's going to go super bullish and I hold to this specific target? And then when you figure out all these plays, you can create multiple plays and multiple trades out of one single trading idea. Like if I have an idea that SPY's going to have a super bullish day, I can create multiple trading ideas out of that to capitalize on the trend. Okay, I'm going to leave some here with some far out of the money contracts. I'm just going to hold those. And then a couple $100 can turn into a couple $1,000 in that situation. Okay, I'm going to I'm going to go with some different types of contracts. I'm going to size in heavier on these. I'm going to scale out on some rips, contracts that are maybe more considered safer. but the risk to reward ratio wouldn't be as high in that sense. So that's something for you to think about. And then I'm going to scale out on rips. And then when it goes back down to dips, I'm going to add back on the dips. And then when it goes back down to those dips, maybe I see an opportunity where it makes sense to buy an SPX contract. So instead of adding back to that other contract that I'm holding still with some size, I pick up an SPX contract. And then all these trading ideas come, and then news comes out, and then you have trading setups. I looked at my watch list yesterday. I had 3 stocks on my watch list. Every single idea that I have on my watch list played out. So I have this daily pattern trading strategy where basically I look at the daily candle. And obviously, in terms of doing this, I have to find the right stock and the right, liquidity for the option chain. But I have a trading strategy where I look at the daily candle, and based off the daily candle pattern, it's going to tell me if the stock is going to close strong or weak for the day. And then I could take advantage of that entire trend for the day. One thing I can do is, okay, at open, I'm going to buy super far out, and then I'm just going to hold it till close, make a big gain that way. And then I'm going to continue to take advantage of the trend by using the trading, system that I'm currently using, by buying some far out of money contracts and then selling in the money. And then I'm picking up new contracts, scaling back in when it makes sense, previous resistance, reaction, support, all this stuff, right? So look, man, it's just fucking crazy. I'm very excited to do this. And it's addicting, and it's just very exciting because what I love about it is you can make an absolute fortune by making, a lot of trades on the day, as long as you're entering trades that have very high risk to reward ratios, that have massive upside potential, where you're buying far out of the money, selling deep in the money. You're making plenty of great trades a day. And if you're making plenty of great trades on the day, you don't have to size in big. And the gains are so big percentage-wise, which is another reason why you don't have to size in big. And if you're making enough trades and you're not sizing in big and they're going up, multiple 100%, they're massive gainers, the beauty of this is you can use a lot of your capital since you're making a lot of trades. And by the time the day's over, you can use up like 50% of your account, 70% of your account. Some days you might use up your entire cash account. Other days you might use up like 50% of your account. But the point is, if you're making a lot of trades, and these trades are designed to go up multiple 100% profit returns, and then, some of the trades are maybe designed for smaller wins, 30%, 50% or whatever. If you're making multiple trades a day, you can size in smaller, and then the big percentage gains add up. And then you can burn through like 30%, 50%, or even all your cash by the time the day is over, and you will be left with massive wins. So we have people doing this within the chat, and I'm seeing them making 20, 30, 40, 50% returns on their account in a single day. And the beauty of it is, like I said, they're not sizing in big on their trades, and you can make multiple trades on the day. And the trades that we make are designed to go up a lot percentage-wise in quick periods of time or in long periods of time. It could be a quick scalp where we're looking for 30 to 50%, or it could be another trade where we're looking to hold for 200%. You have to understand the play. Once you know the play, once you know the trade, you can then create multiple trades out of a single trade idea. It's fucking genius when you create a system. If the trade idea is to hold for the bigger win, you can create multiple trades as you are holding just those one contracts for the bigger win. Because remember, you're not going all in on that, okay, let's hold for the bigger win. Let's go with the YOLOs further out of the money and sell deep in the money. You're sizing in light on those. And then you can go with safe contracts. And then you could scale out on the rips. And then you can capitalize on the trend. Once it drops back down to previous resistance, you can add back to those same contracts. Or maybe it makes sense to pick up the SPX contract. So you dissect the whole fucking trade. It's genius, man. So that's what I'm working on. And I'm telling you, this is very exciting now because every single day, there's going to be new stock plays. There's going to be new stock setups, and stocks are going to hit major levels that are going to be very exciting to trade at. And then also breaking news comes out, economic events, etc. So new things pop up during the day. The schedule is fucking cracked out. It could be hard to sleep on how exciting this is because you have a nightly schedule where you're preparing for the next day. Then you have a morning schedule because, so think about it. Extended hours, stocks are moving during extended hours. And you're also looking for stocks as the market's closed, not the ones that are just moving during extended hours. So you do that at night. And then at the morning, new stocks up pop on the scanner. And then during the day, news comes out and new stocks pop up the scanner. So literally at night, the morning, and from 9 to 4 can be a schedule of you preparing to trade the best setup prices with multiple stocks. And then from there, you're also looking at SPY, SPX, delayed reactions, top 10 holdings. It's fucking cracked out, man. So I'm looking forward to this, and I'm extremely excited to be in a situation where I'm entering trades with the highest risk to reward ratio that are extremely cheap on the contracts. And the crazy part is I'm doing this right now with an 80% win rate. And it's just very exciting to also trade different stocks at major levels that are offering big percentage gains. And you're making many trades on the day and you're sizing in very small. And man, if you're making big wins, 50% win, 100% win, 200% win, and you're making many trades, not even sizing in big, you can burn through like half your account in a single day, use up half the cash account. And then by the time the day's over with your morning session, middle of the day session, and power hour session, it adds up to massive fucking gains. So if you don't do well during one of the sessions, you can make it all back and do extremely well in the middle session or the end of the session. So what I'm telling you is, it's like the day is never over, and you have to understand how each session works. And you might not be good at trading during one of the sessions, so there's that market open session, then there's that lunchtime session, and then there's that power hour session. It could be considered 3 to 4 sessions, right? And it could become an addiction to just master all of the sessions. But all you need to really do is to master one simple strategy or to just master like one session. You might not be good or you might not like trading during one session. What I'm saying is it gets fucking complex, but you have to get to a place where like you have this heart of cards and you're more like, just very focused and you're fucking fearless and you have this heart of cards and you just know where the price is heading. It's almost as if you're like a market maker in a sense, and you get to this place where you're just extremely confident and it consistently works with this 80% win rate. Once you get there, it almost feels like you can just trade anytime during the day and absolute fucking crush it. But you do have to know the differences between trading during different time sessions. You do have to know the differences of this stuff. But what I'm saying is, man, if you prepare for the best setups at the best prices, you can do this with stocks. And then you can also do this on SPY and SPX every day with the unique trading strategies, with the heart of cards, and with the 30-minute patterns. So this is just some stuff that I wanted to share with you that's on my mind. I would strongly recommend that, if you're serious about learning how to trade and about getting involved with trading options, scalping them, trading them, holding for bigger wins, I would strongly recommend that you do join Team Roar. Because like I said, I've worked with G Roar, and he was also, I was also his instructor and he was learning from me. And this has been the best trading community that I've ever joined, is this Team Roar program. And I love the community. And like I said, G Roar has helped me out as a trader and from a personal level as a person a lot. And me and G Roar, we have that effect on people where we help people, man. We could turn them into entrepreneurs. We could turn them into phenomenal traders. And I'm telling you, once you start to work with me or G Roar, you should be getting results. And if not, if you're not getting results, if you're not satisfied with the experience, then just cancel for the service. We are looking for serious traders who want to become the absolute best. If that's not you, you don't want to become the best, then don't join the program. We're looking for serious traders who want to become the absolute best. An ideal amount to start with is like 3,000 to 5,000. That's an ideal amount. Obviously, you can do it if you have less. If you have $2,000, you can do it. But man, it's just once you start going, just understand, the more capital you have, the better for this, the better the cushion in terms of risk management, right? In terms of like a starting point on the lower end, like $2,000. But I'm telling you, $3,000 to $5,000 in an account with this type of strategy, it's a great start. Obviously, the more money you have, the better. So that's what I've been doing, and that's what I've been focused on. With that being said, I will continue to trade the best setups at the best prices, and I will continue to absolutely crush it. It's just interesting on how fast things change. I was very interested in just trading the power hour, but it's just like I enjoy trading so much, and I love it, that I'm focused on now potentially trading during all sessions. But I have been skipping that morning session a lot. But I have lately been trading the middle of the day and, the end of the day. And like I said, I follow a lot of G Roar's trades. In terms of following a trade, the only trade I've ever really followed is G Roar's. And he's a 95% win rate. So obviously I'm going to follow some of them. I don't follow all of his trades, but I do follow some of them. And I do very well following some of his trades. So it's like, man, I got all these options. I got the best setups at best prices with the stocks I'm scanning for at night, in the morning, and during market hours with news. I got SPY and SPX. I got top 10 holdings in SPY. I got delayed reactions with SPYs. We got G Roar. It's like, we got the options, man. And I'm telling you, if you're looking for a badass group who's serious about getting results for their clients, who's goal-oriented and getting their results, I'm telling you, we don't mess around. If people come in here and they mess around, they cost our company money, they break the rules, they disrupt us, they annoy us, they're not serious, we kick them out of the program. Any professional trading group will do that. So if you want to join this group, just make sure you're serious and make sure you want to make some money. Because what I'm telling you is, We got a lot of winners in here. We got a lot of multimillionaires in here. We got people who are worth 8 figures. We got people who are worth 9 figures in this fucking program. And I would encourage you to join it if that's what you're looking for, man, is to learn how to trade the best setups as prices and to, have that mentorship within the chat with G-Roar and within members in the team chat. So it's an amazing group. It's a very fun community, and it's very serious. We're very goal-oriented and result-oriented. And at the end of the day, what we do, we get people results. That's what we do. We trade and we get people results. We want our clients to make back multiple costs of that monthly subscription every single day. Obviously, if your account's small, then it has to make sense with risk management. But we want our clients to make an absolute fortune, man. We want them to be the absolute best they can be. You have to start somewhere. But I'm telling you, a lot of the people who join this program, they're making back the monthly subscription of the program. Like, it's averaging out every single day. Like I said, some of them are making $500 a day, some of them make $1,000. It depends on your account size. But we see a lot of people making 10, 20, 30% on the day. And like I said, they don't compound it to, millions of dollars, tens of millions of dollars. They cash out every single week, and they might gradually compound the account, but they pay themselves. And that's what you should do as a trader. You work your fucking ass off all fucking week instead of just consistently compounding your account every single week, which puts you in a situation where if you have a bad week or you're on a losing streak, then you have a massive hit and you lose a lot of your results and you lose a lot of money that you made. Instead of doing that, you compound your account for the week and then you cash out at the end of the week. You don't have to reset your account back to its previous balance. You can reset it to a certain account. If you have $10,000 and you made $5,000 on the week, you made 50% on the week, which is very realistic with this type of strategy. Like I said, we have people making 20 to 50% on the day. And they're not going green every single day, but they have a lot of green days and they're doing absolutely phenomenal. Me personally, I'm literally going green basically every single day now with this strategy that I have. But like I said, in terms of this, you can cash out. You can literally cash out at the end of the week. If you want to, you can even pay yourself every single day. You can pay yourself every single day. If you wanted to, you can do that, right? It just depends on your broker and the situation, all that stuff. But they pay themselves at the end of the week, and then they restart with their initial balance, or they restart. So for example, you have a $10,000 account. Let's say you made 50% on the week. You average out a 10% return every single day. Very realistic with this type of strategy because we have people 20 to 50% on the day. But anyways, let's say you do that. You make $5,000 profit. Okay, you pay yourself $3,000 on the week, and then you keep $2,000 in. So now instead of trading with $10,000, you're trading with $12,000 the next week. You're compounding your account and you're paying yourself. That's what I would encourage everyone to do. I would encourage everyone every single week, if you're watching this video, to compound your account, but to pay yourself every single week. So don't take out all the money you made. Leave some in to compound and grow your account. Don't reset yourself back to your starting point, but take some money out and pay yourself. Pay yourself, and then use that to start a business. Use that to invest into yourself. Use that to invest into your future. Use that for yourself. Splurge on yourself a little bit. Have fun. Live life, man. Use it however you want to use it, man. But if you invest that money, that is where you can create true wealth. And you can invest into yourself. You can invest into your education. You can invest into your business and starting a business. You can invest into, one of the things that I will be investing into this year is going to be in Leap Options. I am waiting for a massive pullback within the markets, and that's when I'm planning to open up my investment company once it happens. I'm not going to be going information on when I think it's going to happen, stuff like that, but I have it all planned out. And basically, once I get my confirmations that it's time to start going very heavy on Leap Options, I'm going to be investing a lot of money into Leap Options that are extremely far out of the money. And then the plan is to sell those Leap Options within the next 2 years deep in the money and make an absolute fortune doing that. So what I encourage people to do in terms of trading is to pay themselves weekly. If you want, you could do it daily. I'm telling you, create a badass system. You optimize your life and your trading style and your trading system however you want to optimize it for. You need to sit and think of a strategy that makes sense for your life and the goals that you want to achieve out of your life. Maybe you want to pay yourself daily. Maybe you want to live that type of life, or maybe you want to pay yourself weekly. But the point is, don't just pay yourself all the money you make. You need some for taxes. So put some in that situation in a separate account. And then also in like a savings account if you want. And then also leave some in your trading account to compound your account. Part of trading is to compound your account. but you have to pay yourself, right? Because you're working, you need to get paid. You don't just want to compound your account and then that exposes you to more risk because you're not paying yourself. And then if you have a losing streak or whatever, and then invest, man. Invest into your education, invest into your future, invest into yourself, invest into a business, invest into stocks, invest into Leap options. You have to invest. So those are just some of the things that I tell people. With that being said, I'm going to end the video. If you want to join Team Roar, it's the first link down below in the description. You can start trading with us tomorrow.